Hey, this is Lee and Mike, and we're back with another BFKP in brief. This time about the wonderful world of banking, which I know everybody wants to talk about. Obviously, uh, a little over a week ago, Silicon Valley Bank and Signature Bank both failed. Number of issues were raised as a result of that, but the issue that's nearest and dearest to our heart is how it impacts commercial leases, in particular, how it impacts letters of credit, which many of our clients use as security for their commercial lease, both on the obviously the landlord side, the tenant side. Um, the prevailing question in the community is if you have a letter of credit with one of these two banks, what's the practical impact? How should you deal with it as a tenant? How should you deal with it as a landlord? Um, the uh, the big picture news is that almost immediately, the FDIC declared that the two bridge banks, which they set up for Signature and Silicon, so they set up Signature Valley Bridge, Silicon Valley Bridge would honor all of the contracts of the failed banks. With respect to letters of credit, Silicon actually went a step further and said that they were going to honor all existing credit facilities. Signature didn't go that far in any of their public pronouncements, but by virtue of the fact that they were taking on all of the contractual obligations, I think most people believe there's the same operative effect with respect to letters of credit. Um, in any event, all the obligations were backed by the FDIC. So there's been some news since then, which we don't want to get too into the weeds on. Broadly speaking, Flagstar Bank purchased all the assets of Signature Bank, or the majority of the assets of Signature Bank, and I believe was it New York Community or Citizens Bank that purchased
For Citizens. Yeah, I didn't want to interrupt. You're doing so well there, Lee. Just really carrying it. I was riding your coattails. I was going to see if anyone would notice if I went to get a cup of coffee. But
Well,
yeah,
your turn's coming. Anyway, substantially all the assets were purchased. Don't really believe, and it's not clear that that's going to have an impact on this particular analysis. It's not going to have an impact on the letter of credit analysis, but it is kind of important to know if you have an account at one of those two banks. So in any event, the question that we're getting from many of our clients, both on the landlord and tenant side, is I have this letter of credit in place. The landlord is coming to me and telling me that I have to replace the letter of credit, or if I am the landlord, the tenant is coming to me and saying, I don't want to replace the letter of credit, I want to keep it in place. Mike, what's the response in light of the news? What should landlords and tenants be thinking about, both from a lease perspective and kind of more broadly speaking, in reaction to this news?
Yeah, and it's a tough situation for landlords to be in because it's an evolving situation, right? By the time we finish recording this and posting it, there might be some news that something else has happened. First Republic, which we haven't even mentioned yet, is another one of these banks that issues a lot of letters of credit, especially in New York City. And they haven't failed. They haven't been taken over by the FDIC, but there's a lot of fluctuation. So for a landlord, it's a tough case, and a lot of them are probably tempted right now, and some of them already are, to send a notice out to their tenant that they consider it to be a letter of credit that no longer meets the obligations under the lease, which is going to be a recurring theme here that we're going to talk about, and that they either want it to be replaced within a very short period of time, or they may draw down on the letter of credit and hold it as cash and then leave the borrower to sort it out with their bank. Now, for landlords, and then we'll get to tenants, don't do any of these things probably before consulting your lawyer, but definitely before consulting your lease. It's going to be very clear. It should be very clear and spelled out in the security deposit provision of your lease what period of time the tenant has to replace it, and do you have a right to consider that letter of credit to no longer be worthy of the issue or of your security deposit. Definitely have to check the lease, or you may be in default, especially if you're going to draw down on it. For tenants, if you haven't gotten a notice from your landlord yet, you probably should not do anything. You can consult with your real estate attorney if you have a good relationship with them, but a lot of tenants, once they're in the lease, they don't really even think about the letter of credit. It shouldn't be a default automatically if the letter of credit that you provided is from a bank that was now taken over that the landlord doesn't consider to be worthy. So you should also check your lease. If you do get a notice from your landlord that you have to replace the letter of credit, I think the practical question is, how much is that going to cost you as a tenant? Obviously, you had nothing to do with these bank failures or these global events that are impacting your lease now. It may be costly. It could be, 10 or tens of thousands of dollars, depending on the relationship you have with the bank that issued it or that's going to issue it. A lot of times these are issued to clients that have a revolving line of credit with that bank already. And that's what collateralizes essentially that letter of credit. If the bank is willing to, pay out sometimes hundreds of thousands of dollars to cover a security deposit claim by the landlord, they have to have a pretty good relationship with the applicant or the tenant. So that's the first question: is if it's going to be prohibitively expensive, do you want to push back on the landlord? If it's not going to be prohibitively expensive and you're moving your banking relationship anyway, maybe a moot point. You might be asking the landlord if you can replace it because you're now going to have more leverage with a new bank to issue it. But I think the key theme here, and you can correct me if I'm wrong, Lee, it depends what's in the lease. If you want to push back, or if a landlord wants to push to have it replaced, what are the tests for the letter of credit issuer in the bank? The most common ones are a net worth test. Could be that it has to have a net worth of at least $1 billion, maybe more than that, but I'm just using that number as an example. The landlord might have a right to reasonably approve a letter of credit issuer. And in fact, it's likely that they do. This is where the lawyers start to have fun, right? Because is Silicon Valley Bridge Bank, is that really unreasonable that they are now the issuer? They're backstopped by the FDIC. If First Citizens is taking those over, is First Citizens as the white knight now unacceptable? There is room to argue and fight about this if it's necessary.
Yeah, I mean, I think I just have kind of one additional thought, which is obviously the majority, if not all, of these letters of credit are going to be renewable within the next year. The practical reality is most of them are not going to be renewed. So if you're a tenant or if you're a landlord, it might make sense from a goodwill perspective or some other practical reason to get a head start on that now anyway.
Right.
And think about, as long as you can do it in a way that makes sense from a cost perspective, think about seeking a letter of credit from another bank that you're already doing business with, or that you want to do business with in the future. Maybe you want to move deposits from one of the bridge banks to another bank, and you can take the opportunity now to do that and use that deposit as collateral. Maybe you have a revolving line of credit at another bank, and it's very easy for you to transfer the letter of credit over. Maybe those banks are even willing to waive whatever costs are associated. So I think it makes sense to kind of think about this now, because you're going to have to do it in all likelihood anyway at some point in the future, as long as your lease term is beyond another year. And if it's less than that, then there are practical realities that make it less sense to replace the letter of credit.
Right. And actually, I think we should really quickly just dive a little deeper in that, because people, again, even if you signed a lease that had a letter of credit and you were part of that process, you probably haven't thought about your letter of credit since that happened, and it could be a few years. Most of them automatically renew. They have an evergreen provision that says unless 30 or 60 days before the annual expiration, the bank decides that they're going to, in writing, cancel it as of that anniversary date, it's just going to automatically renew. So what Lee is saying is, if you had it with a bank that has one of those evergreen provisions, it's likely that you're going to have to address this at some point this year, or in your fiscal year for the letter of credit, even if it's not being brought to a head by your landlord right now. And yeah, I think it's going to bring up some conversations about banking generally that is probably beyond the scope of this installment of the podcast. But if you think about it, one of the big issues that caused this panic was you had all these institutions and individuals, but a lot of institutions, a lot of real estate clients keeping a lot of cash with these banks, a lot of deposits with these banks above the $250,000 threshold that the FDIC will ensure. Is there going to be any kind of change in thinking there? Spreading it out more. A lot of these banks, if they're going to give you the white glove treatment, or if they're going to make a commercial real estate loan or any kind of business loan, they might say, yeah, we'll do that, but we need deposits, right? That's the lifeblood of a commercial bank is having healthy deposits. The problem, of course, is that it's if they're not investing those deposits in things that'll hold their value, and there's a run on the bank, the FDIC is only going to be able to, the FDIC, and then that overlay where they say we're going to cover all the obligations. They can only do that so many times. They can't do it for all the banks in the banking system. So maybe I just queued up, another installment. We should probably get a guest that knows more about banking law than we do, but
you queued up part two, but I think broadly speaking, check your lease, think about what the practical realities are of your current situation. Take into account, both as a landlord and tenant, the relationship between your landlord and your tenant, and how to best preserve that relationship moving forward, and then kind of act accordingly. But you do have some optionality. It's not as black and white as it might seem.
Exactly. Maybe that's a good place to leave it before we start to get too into the weeds. I think we covered the basic topics, and we probably could have made this 10 seconds and just said, read your lease and ask your lawyer if you don't understand it. But it's always fun to get into like the why and the how and the stuff that maybe only lawyers can appreciate, but hopefully some others as well.
All right. So it's always 10 seconds or 10 hours. So we'll leave it at 10 minutes, and we'll see you next time.
Oh, I like that. That should be maybe a catchphrase for the show.
Well, you just ruined it. Bye, Mike.
Goodbye, Lee.